So this was part of my reading list for my research, and there you go. Oh, damn it. There you go. Keynes Hayek. I'll shoot you a note, and I'll probably put it in the comments underneath this. But Nicholas Wapshott wrote a book called Keynes Hayek: The Clash That Defined Modern Economics, and in it goes through how Keynes in 1919, with the consequences of the peace, inspired Hayek, and then went down diverging paths. Hayek from Austria, obviously the Austrian School of Economics, studied under von Mises. Keynes out of Cambridge. And it wasn't until Hayek was recruited to the London School of Economics that their battle really ensued, where because of the economic consequences of the peace, that is post-war reparations, Keynes had a view that actually governments could step in to soften the blows of downturns that we saw post-world wars, to soften the impact that led to devastation across the world. Post-war, people were in depressions, and he saw that in order to offset the damage to life, governments could intervene with stimulus, but the moment that that stimulus had served its purpose was to pull out and let the free market then take over. So he saw government as acting as like a cushioning on those kind of events. Hayek disagreed and said, actually, you just need to let it play out. But at the time, they didn't know any better, and it was a battle of ideas. What that's now morphed into was something that was born out of suffering and trying to heal and minimize suffering in the world, which is what Keynes came from, if this book is accurate, which I think it is. And it's been perverted now into actually we'll just print money and stimulate whenever there's even the slightest, tiniest shock. One was built out of a wartime effort. One now is perverted into, oh no, we've got a slight downturn in economic growth. We better print money and stimulate the crap out of everything. And so when you actually look at that, they came from very similar foundations. And so now let's apply that story to MicroStrategy. It's come from a great place. It's creating stability in our market today with Bitcoin. It's absorbing a lot of the shocks more than likely. The buying from strategy alone is so stupidly high that it's not tanking the price. It's softening. It's maturing this asset class, that's giving it more credibility on the global stage. So on an adoption front, I think what strategy doing today is phenomenal. But now fast forward, similar to Keynes, good intentions, what could it become? And that is anyone's imagination. And if in a 40 to 50 year time frame, if it's true that they don't sell, and who knows what changes over time, what happens if the CAGR of Bitcoin starts to collapse and it's no longer growing at the 39% to 40% that Saylor is expecting, and allowing for, is it stretch? What's the 11% perpetual
Yeah, that's
instrument that he
stretch
did?
SDSC, the
Stretch.
11.5.
Yep. That's good for a couple of years, but then that'll probably start to reduce. Will the CAGR start to reduce? What is the economics of it then? What are they going to pivot to in terms of an operating business that's then going to support the cash flows for people wanting to invest into them as a stock at whatever multiple it will be into the future? And if they become operating, what are those operations? Will those operations, like what would do with their Bitcoin treasury? Do they become a reserve bank effectively? Are they even allowed to? Will the government step in at that point because they are now exerting forces that should be in the public good, not into a private company under public shareholder interests? So you've got a whole bunch of things that you just don't know what it's going to look like. And so to your mate's point that didn't think that Bitcoin would be a medium of exchange or a money, maybe that's the thing, and maybe it just becomes a permanent reserve asset that allows for value to be exchanged, but countries still exert their sovereign rights by holding the fiat, and will issue the fiat, and then it'll become a battle of whose fiat is better, whose provides enough stability that allows it to remain a functional currency, but enough flexibility that maybe Bitcoin won't allow per se for governments to execute against the public demand on them. And each country is going to be different. You're going to have a collectivist society that you see out of China and to a degree India, and you're going to have individualistic societies out of Europe, the US, Australia, New Zealand, Canada. And how they will use Bitcoin is going to be very different. But maybe it's always a reserve asset. And so you just don't know what path that's going to take. And so anyone that talks with any level of certainty that says, yeah, it's the best thing ever, Sailor is the best, hasn't thought long enough. And until the thing that will give me confidence will be, what is Sailor's exit strategy for himself out of that business? What does that look like? Because is there a succession plan? I know Fong Lee as CEO is in there, but I don't know what the next line of succession is. Who's going to be the next executive chairman, which Sailor is at the moment? What policies are you going to put in place? Can they be voted out easily? What safeguards are going to be in place in 30, 40, 50 years? If you are truly the bastion of Bitcoin. And so we may be sacrificing the long term through the propping up of strategy today because of the short term benefit it's providing us in the Bitcoin community today. They accumulate a lot. Maybe it bolsters all of our bags, price go up, softens the volatility on the downside. Great benefit. But long term, we may be sacrificing something that we just don't know yet.
I mean, do you think people buy strategy because of that? I feel like people buy strategy because they want to outperform Bitcoin and not because they care about Bitcoin. I think they care about themselves and their bags and not about the collective Bitcoin community.
Oh, 100% I agree. And it's just the free market playing itself out. So this was probably always going to play out. That someone was going to realize they found an arbitrage in the market, which Saylor did. He was able to buy Bitcoin at 0% on all of his borrowings. He's now found an arbitrage on creating this perpetual product that allows him to give out effectively a monthly dividend that outperforms a money market fund, while keeping that upside. But he's just managing the fact that some years are down years, some years are up years, but on average, over a long enough period of time, it's got a CAGR of 39%. So me paying out 11%, I've got a 20 something percent arbitrage. Happy days. That's accretive to his company. So I don't disagree that it would have always happened. But what I'm saying is that free market at play to do this sort of thing under public company structures that are headquartered out of the US and governed by laws, what does that do long term? I have no idea. And so these are sort of the unknowns that we now need to start, not that we need to start thinking about, but we need to be open to realize that we're not creating our own blind spots. And so multiple treasury companies actually like that idea. And I'd like them all to get to Sailor size, or I'd like to see Sailor downplay it, become an operating business and diversify and de-risk across more. So decentralized treasury companies means that it's not across multiple jurisdictions. So you'd need to get geographical and legal system diversification across them. Otherwise, you're all centralized.
I mean, the USA holds a lot of the gold of the world, if I'm not mistaken. I don't know the exact percentage, but did I hear somewhere 20 or 25% or something like I just heard that
they're about to do an audit on Fort Knox, if you believe what Trump was saying as well. I know the
but I
French
hear
have got
that
a whole
since a
bunch of
long
gold.
time.
Yeah. But again, it comes down to then the shared fiction of the time. So Yuval Noah Harari in his book Sapiens, I think, articulates this thesis incredibly well. Gold as holding value is a complete fiction. It's what we created in our minds to believe that it is value. And one of the things that I hate about the way that we talk about value is that we think it's objective. Value is 100% subjective. There is no objective value. There are objective or intrinsic properties that things have, but it is we who assign value to it. So gold, people will say, oh, it's used in technology. Okay, great. It's used in technology for today, but who knows what technology will be in the future, and will it use gold as a conductor? I don't know. So in the future, it may not hold that value, but still maintains all of its current physical properties. Then they'll say, oh, it's used for jewelry. Okay, great. For as long as people wear gold jewelry. In India, awesome. Culturally, in India, gold jewelry, synonymous. People all saw value in it. I don't think they do it in Australia. So again, that's a cultural thing, which is a collective myth that has been created and believed by the masses that have assigned that value to that particular element of gold's market cap. So I always say, when people ask me this, it's like stuff has intrinsic properties. So stuff that we can objectively measure from multiple perspectives and all come to the same result, that's an intrinsic property. But if you cannot come to the same valuation of what that thing is valued, then it is by nature subjective. And when you realize that everything is value is all subjective and based on that shared belief, what if we, in 50 years, we are so technologically advanced, we are now a multi-planetary species. Does this thing. He's got a base on the moon. They've perfected asteroid mining, which allows them to mine and literally just hurl it back down to Earth to reduce the cost. I think they're exploring how do you mine an asteroid, and instead of coming in for a soft landing, you literally just fling it into the atmosphere and let it impact, and then go and grab everything. That way, it's super, super cheap and cheaper gold mining on an asteroid than it is terrestrially on Earth. What does that then do to it? You've just jacked up the supply, and we all know supply demand economics. So suddenly the value starts to plummet. And will we as a species believe that that is valuable when we've got a colony on Mars, a base on the moon? I think we look at the world through the lens which we've been brought up with, which makes a lot of sense. Why education is so important. The first 25 years largely sets in place all of your cognitive foundations. Your prefrontal cortex goes into full overdrive, like fully developed by mid 20s. And then by that point, a lot of it is sort of muscle memory. It is drawing subconsciously from all the collective experiences that you've encountered. And so we view the world through that. And right now we're viewing the world through gold is so important, and the US has a lot of the gold. Okay, but for how long is that going to be valuable? How long is that going to be the thing that props them up? China's buying a lot of gold. France has got a lot of gold. India's got some gold. Okay, great. The next wave is Bitcoin. And then Bitcoin will be that thing that gold is today. And that's what I hope, that it becomes that reserve asset for the digital age that allows it to be transferred everywhere. Be transferred to the moon. It can be transferred to Mars. It's just a communication and to make sure that any node running on each of those planets is, uh, I guess that there's obviously time lag, and we'll solve for that in the Bitcoin community somehow between interplanetary use of it. But like this is a very fictitious example. Who knows if that's even possible? But you could see that that's going to be a far better solution for value transfer um, than gold will be. And so maybe it just usurps it, and then all the gold becomes back to its utility value, which is, can I use that gold in all of my technology? So I'm actually just going to sell it to the private sector to use in creating electronics technologies, things that we need gold for.
It shows how early we are. We have a asset that is, I don't know, 1.5 trillion dollars in market cap, is like
Baby.
0.1% of the total money in the world, if you think about the Jesse Meyer model.
Yep.
And we are thinking already how we can not only make Bitcoin the dominant form of reserve asset, money, whatever you want to call it, or whatever you believe it will become, but we also think about how we can transfer that already to other planets and
Yeah.
make it there also the most dominant form of. So there's a lot of ground to cover for Bitcoin for those who are early and think we are at the top.
But it can happen quickly. And I think at the very start, I was talking about, 100-year period, 1920 to now, what's happened. But the trend is it's accelerating in terms of how rapid the change can occur. What Elon does with his companies just shows how quickly things can move if they need to, if people want them to move that quickly. And so to certain people in the space that will say, yeah, Bitcoin to a million, it's just one God candle away and we're there to $1 million. That's what Samson Mao. Absolutely possible. There could be an event that causes that to occur. It could be slow, but my guess is it'll actually happen faster than what I've been describing it to be will happen. We're 15 years in. The next 5 to 10 years, I think, are going to be explosive because we're now past on the adoption curve, we're past the early adopters now. It's now going into the early majority. And in that early majority, it's sort of like an S curve that starts, not an S curve, but a bell curve that starts to rapidly accelerate to get to a 50% population adoption. If you look at that bell curve model of technology adoption, and we're into that early majority phase now. Corporations are already adopting it. Nation states have already got some on the balance sheets. So we're in that accelerated phase now. We're getting clarity on the regulation front. So I think things will accelerate very, very, very quickly. But the problems that will rear their head will start to come as we start to go into the late majority, where more than 50% of the population are using it. And now suddenly we start to try to exploit it even more and even more and even more. And how that gets done in this combination of both the physical and the digital, I have no idea. How do laws, how do nations interact with it while maintaining their sovereign self-interest as a country when you've got Bitcoin, which is apolitical?
And that's the interesting question, like, because if you think about any technology, they are always adapted in different speeds, in different ways, in different countries. Like the internet, electricity, everything, cars, whatever technology you can think of, they have been adopted with different speeds in different jurisdictions and in completely different ways. The uh, the phone line era that was popular in Germany, in Austria, I don't know, in America probably also, didn't even make it to parts of Africa. They directly switched to cell phones.
Yeah.
There are parts in the world where there is no electricity. And if you don't have electricity, like in Melbourne or in Austria or like wherever you are, you freak out after just a few hours.
Yep.
And so it's like,
agree.
It will be really interesting how different nations will adopt Bitcoin. China versus USA, Europe versus Africa. Like there's so many different. We always talk about like, oh, Bitcoin is going to be adopted like that, and I'm like, yeah, that might be true in one specific area in the world, in one specific situation, but it might be something like a 18-year-old Nigerian in Africa looks very different in Bitcoin than like a 72 Austrian retiree. Like they have like very, very different sets of problems, very different set of situations, and they're adopting Bitcoin in very different ways.
Correct. And, we push back against central bank digital currencies in a big way for good reason. But now picture Bitcoin as a fictitious example. I hope that it doesn't occur, and I don't think the likelihood is overly high. But what if Bitcoin has its MySpace moment? In a similar way that Africa didn't take on fixed connectivity and went straight to mobile, so they just completely bypassed a form of technology and went straight to the next thing. What if there is a Bitcoin MySpace to the new Facebook moment, similar to what Instagram was going to do to Facebook, similar to what TikTok was going to do to Instagram? We see technology advance, and actually the best technology will always win out. Right now, yes, we're early adopters, but we haven't really tested through the gauntlet of Bitcoin through this digital physical coexistence in a real way. Because right now it is a 1.5, $1.6 trillion asset class. To your point, 0.1% of the money. It's two-fifths of nothing in relation to the rest of the world. And so the world is like, okay, yeah, Wall Street's getting involved. They probably think they can make quite a bit of money. Early adopter. It's a like 1% bet because they're banked on the rest of the value that they already got under management to power the majority of their return.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.